Hey, good morning. It is 6:55 a.m. Central, May 20th, EIA Day, and Federal Office of Management Committee, whatever their name is, FOMC Minute Day. Federal Minute Day. So I think that the dollar is rallying. This is just my thoughts. I have not read this anywhere. It's the way I think. I think we've gotten a dollar rally off of smart money getting in the market ahead of the minutes talking about an early rate hike. There, I said it. Crude is in a $3 range between 57 and 60. We gapped down and through this trend line break the other day, broke the trend line, came back to test it, and then gapped down yesterday. So today we are likely to come back and, well, we're either going to fail at yesterday's high or open and flush down to this area, or we're going to fill the gap. I mean, we're just going to be in a $3 range for the time being. We had all this consolidation. We've got a head, and now we've got our shoulder building on the daily. So this is a clear head and shoulders setting up, which does not bode well for crude. The head and shoulders will run the length of the direction. So if you take it from the top, looking at $50 crude. Okay, so let's build our right shoulder and get on with it. Now we know what we're playing with. I always like to know what my playing field is. Taking a look at yesterday's price action, which I thought because of the EIA report we would have gotten what we got yesterday today, but we flushed down yesterday. You can see that price stalled at the previous value area low for quite a while. I mean, over an hour of from 2 in the morning, 3 in the morning until 7 in the morning. That's a long time, just sitting on that value area low. And when that broke, that should have clued me in that we were going to sell off. But I got caught up in my level that I had set for myself. This is where you get in trouble for doing your analysis. Price sat there chopping up and down, and so did I. I ended up, doing a lot of damage to my account right here, trying to take these breakouts. And I didn't wait for the consolidation to clearly break. And my rule is going forward that when I have a consolidation period on a support or resistance area, I want a 1 bar or 2 bar break out of that zone before I enter. But yesterday was just a slow grinding down sell-off. There was no rush to the races. I've got my sayings mixed up. There was no racing to the exits. So we just grinded down slow. I've got my momentum set up so that when it crosses zero, that it exactly matches. Let me pull this up so you can see it. It exactly matches the sell-off. And this, I did not set up to optimize this. This is just how the indicator works. It's a zero line cross. And this matches up so well if there was follow through. Sometimes you can see it does not work. But when momentum crosses the zero line, you know to get in a directional trade. And I also I have filters set up on here so I can be in the direction of the trend. When it's flat and you're crossing my filters, you're going to get some erroneous signals. So anytime price is sitting on a bunch of confluence area of filters, be very careful of your oscillator signals because they can be erroneous at those levels. You almost always have to wait for a clear indication of which way price is going to break before you take a signal on these oscillators. So with all of that said, let's take a look at the gap play. I'm going to be watching for a gap play back up to 59.85, which is my level, and then a bounce back and forth inside this range. Today is EIA report day. We have to be very, very careful. Trade in the direction of your point of control. Trade in the direction of your momentum. Right now we're ranging and we're just going consolidated flat. And here is yesterday's value area high at 59.65. So that's definitely in play for today. Come up, pop that, and then come back down. If we come back up and get my gap play, which I need to mark this on my chart, 59.85. If we come up to tap this 65, we're coming up to 85 right there. And we're going to hit this like a brick wall. If it's a if we race up here after the EIA report's released, be very, oops, I didn't mean to get the ruler. I meant to get the arrow. If we race up here out of EIA report, be very, very, very cautious, because this is a brick wall, folks. It's going to bounce right there. Boom. It's going to come right back down. So that's the trade of the day. The gap line, it may not get there. We may just consolidate sideways, building that right shoulder. And the right shoulder area, we look at it again, keep looking at my higher time frame chart, is between 57 and 60. So there's the play. I'm building my shoulder, right shoulder girl today, and happy trading. Be careful out there, and we'll see what the minutes say. Maybe it'll provide us some opportunity to make some money, and that would be nice for all of us.